Assalamualaikum warahmatullahi wabarakatuh. Thank you for time for us. I am Enda Yunitias from Accounting Department at Universitas Nahdlatul Ulama Surabaya. Our research about what coronavirus case affecting the market volatility and exchange rates in Indonesia by me and Dina Anggraini Susesti. Our reason why we take research about coronavirus affecting in the market volatility in Indonesia because at now the business world has been ravaged by the COVID-19, which starts in China's Hubei, Wuhan at the end of 2019. The virus has spread to more than 120 countries, based on data showing that the virus has infected more than 1 million people worldwide. Such a condition creates panic among the world community where the virus spreads rapidly through direct contact or air. This unstable economic situation created a massive wave of layoffs where companies had to close down and were unable to cover operational costs, causing a wave of layoffs. Concerns about the impact of COVID-19 on sustainability of the company as well as the expectation that the pandemic will last a long time, encouraging capital outflows caused by panic selling on the stock market. This uncertain situation is not surprising if investors prefer to hold cash compared to holding more risky securities. Of course, this pandemic outbreak caused the whole world to issue a lockdown policy, namely imposing restrictions on all activities, which caused huge losses to the economy. Much of the existing research regarding exchange rates in Asia has focused on their volatility and relationship with trade and price. More specifically, their asymmetric effect of the exchange rate on domestic corporate goods prices when the exchange rate is more volatile. A study conducted by Kiki examines risk management for the March Black Swan event in relation to the effect of COVID-19 on Indonesian capital market. Some of literature review from Yilmaz Kuday 2020. He states the movement of the stock price index to have a negative impact due to COVID. This COVID virus has a tremendous impact on stock price volatility compared to similar diseases such as Ebola. Stock market volatility uses a sharp up and down movement of stock prices out of the ordinary. And the second, from Iqbal et al. 2020, the COVID virus situation, it has a negative impact on exchange rates in all countries, both directly and indirectly. And Burhanuddin and Andy 2020 that can have an impact on cultural and health changes and the presence on the coronavirus has a negative impact on the world economy. They examine the threat of the global economic crisis from the impact of the spread of the coronavirus resulting in economic and there is negative rumor will have a rapid impact on the decline in stock prices. And in Chang and Yan 2020, this pandemic not only endangers the safety of the human health, but also endangers the health of financial market and stock market. Our hypothesis Therefore, mm, hypothesis 1 is the effect of the number of positive COVID-19 cases on the volatility of share prices on the IDX. Hypothesis 2, the number of positive COVID-19 affects the exchange rates. Hypothesis 3, the exchange rates affect the volatility of stock price. Hypothesis 4, the total effect of the number of positive COVID-19 cases on the volatility of stock prices on the IDX with the exchange rate as a mediating variable. This result is an event study research with path analysis model. All of the daily time series data below has been collected and retrieved from BNPB, Bloomberg, and IDX. This research was started in early March 2020 as the beginning of the occurrence of positive case COVID-19 in Indonesia until June 2020. There are 78 observations in our research. From the SPSS analysis above, it can be seen that the standard beta of the positive case variable COVID-19 is 0.026 with a significant value of 0.820. So, hypothesis 1 is not supported. And then found that positive case of COVID-19 can have a direct effect on the volatility of stock market and can also have indirect effect on the exchange rate. Hypothesis 3 is supported about the effect of exchange rate towards volatility stock market in IDX. From this study, it was found that COVID-19 case didn't have a significant effect on the stock price volatility in long term, but only in short term. This can be seen from the shift in share price volatility that occurred on the Indonesia Stock Exchange, where the volatility occurred in the period March to the end April 2020 only, and while from May to July, there was no volatility of share price on the Indonesia Stock Exchange, which is inversely proportional to positive case of COVID-19 which experience a sharp spike every month. The result of this study reject the theory put forward by Cheng and Yan 2020, Goodall 2020, states that this pandemic not only endangers the safety of women's health, but also endangers the health of financial market and stock market. From the result of the SPSS calculation above, it can be seen that the standard beta variable of the case of COVID-19 against the rupee exchange rate is 0.131 with a sig value of 0.257. So, hypothesis 2 not supported. And the positive case variable COVID-19 doesn't have a significant effect on the US dollar exchange rate. And then hypothesis 4 about the total effect of the positive case of COVID-19 on the stock market price volatility is about 0.0766. So, conclusion in our research is a better understanding of the short run and long run movement enable financial managers to make well-informed investment and financial decisions. While sufficiently understand short-run and long-run movement of exchange rates and stock price, financial managers and policymakers should as well be aware of that coupling and decoupling effect between specific currencies may exist. This paper suggests that the global financial crisis have some impact on Indonesian economy, especially on money supply, but it has limitation in providing most reasoning and conviction point. Further research may be directed at some of the above issues. The empirical model may be estimated with alternative economic and financial factors or markets. Studies encompassing the foreign economy should be conducted where data is available. Such research should contribute toward improving our understanding of the market mechanism and response of each market to the frequently occurring phenomena of economic and financial crisis, whether regional or global. So, thank you and wassalamualaikum warahmatullahi wabarakatuh.